Hey, Julian. So, what led you to financial services?
Well, first I started out as an insurance agent for um, a company, and as I grew, 32 years later, I got more um, knowledgeable with other products, including IULs, and as I grew into the business, I really enjoyed helping people. I'm compassionate with trying to help them because a lot of our you know friends and relatives do need help with financial planning. That's how I got into it. So Cecile, how did you get into this business?
So, first of all, just backtrack. I've been in IT for many years, so maybe 20 years. But but growing up, I grew up in a real estate business. Um, my father, we have a real estate business in the Philippines. And with that mindset, even though I was in IT, I pursued real estate investments. And that led me to financial services because uh, it's a compatible mix that I can put together with a real estate and financial services as I protect my assets and use the compound interest to leverage my real estate investments.
Very good. Cecile, I understand that we have IULs. Can you tell me exactly what the benefits are?
Oh, the benefits with IUL, which they call it Index Universal Life, is that when you put your money or you contributed to that policy, you can you can rest assured it it can leverage in the investment all the way, maybe capped to 12%. And when the market crashes, it won't crash because it has a floor rate, and sometimes it has a 1% rate. Then your money's protected. It will not, it will not go down. So that's the great thing with the IUL. What do you think is the benefit with IUL for in your experience?
Well, in my experience, because I've been in the business again 32 years, I've seen a lot of products that have come and go. Uh, I had the opportunity to actually work for a company as a internal wholesaler to actually build a product from scratch. And from there, I've noticed as the market, as the market in the financial services evolved, IUL came about because we've had crashes, we've had um, a lot of people losing money, that they developed this one product that gives us a floor where the market crashes, you don't lose anything.
Yeah.
Although you don't gain as much as if the market goes up 25%, you are capped with a certain amount, but at least you don't lose anything. That's the main thing. Plus, it also helps with, whether you plan to use it for college planning, retirement planning. It's so flexible. You can start as much as you want, based up to MEC, or as minimum as you want to start. That's the beauty about it. And at the same time, if you want to increase your death benefit, you can put it within the same policy, so you don't have to pay for those extra admin costs buying another policy. Cecile, I've been hearing a lot about what they call infinite banking.
Mm-hmm.
Can you tell me exactly what that is?
So infinite banking is what they call uh, being your own bank. So it's a concept. So they call it infinite banking concept. So IBC for short. Um, so it's a concept that it's a strategy that you can use either for whole life, or you can use it in IUL as well. But it was originally used for whole life. Um, so you use that. Being your own bank is that we contribute to your policy, and usually it's better that do you max your policy. Once you max your policy, you can borrow from it tax free, and you can use that either for your real estate investments or your business. And with that, you can borrow as many times you want because you're borrowing from yourself. Comparing if you borrow from a bank, then you can get or credit card or loan for investment banking. You don't have any interest rate because it's your bank. And at the same time, so once you borrow from it, you watch it grow as if you didn't borrow from it. So meaning your interest will maybe for whole life it's about 6%, 5%, and for IUL it can go up to 12%. When you borrow from that policy, that that interest will grow as if you didn't borrow from it. So that's the beauty of it.
So basically, you don't have to go through all that red tape to, hopefully get approved for a loan or anything.
Yeah, no,
That's good.
no. So that's why it's a great it's a great strategy. Especially I'm from a real estate investor. For you out there who are investing and flipping houses and maintaining your apartments, having this type of strategy is a great way. You're gonna have that benefit of tax advantage, and it's always liquid. Anytime you need, it's there. At the same time, it will grow. It will grow whatever policy or plan that you have. So if it's a whole life, then it's always guaranteed. And if it's IOL, if you wanna have IOL, it's always going to be like average about 8% like that. But if
Okay.
in the market crashes, it's protected.
That's interesting. So basically, with today's market and people still waiting on the market to get better in real estate, this is something where they can put their money in and hold it and have a better growth and don't have to really go through the red tape of.
No,
It's
no. So they don't have to have that problem of if they get approved or anything like what's the interest rate on that time, and you are your own bank and you're your own loan. So you borrow from itself, and then you can return that money anytime that you need.
Okay, so basically, if you were a real estate investor and you had money sitting in a CD or a savings account waiting to when the market finally goes up to put money in, you're better off putting it into a.
You're
into the
better
banking.
off putting it there because at the same time, since it is a policy, it has an asset protection. So that asset protection will help you and protect you as an owner from the mortgage or the house itself and your legacy. And at the same time, if it does have a living benefits, it will cover, if you get a heart attack, stroke, cancer. It's what you call living benefits. If that policy have that, so it will protect you from that.
Okay.
And you can borrow from that policy. Let's say your policy is 1 million, and whatever your sickness is, it's allotted. Let's say you have a heart attack, you can get that money right away from that policy. You're protected.
Okay. So if you had a realtor that had clients that are still waiting just to, buy investments or real properties, there was a great people that we can tap into.
Yeah. So how you're gonna do it? There is a plan that you wanna follow through when you do the infant banking. It depends on how you're gonna use it. For a case study, let's just say you want to use it for real estate investment, and this is not for everyone. If you want to have a high yield for real estate investment, you want to like put at least, let's say you have a HELOC. It's better that you get a HELOC and fund it maybe 100,000 for 5 years, right? So 100,000 for 5 years, and we'll accumulate that. After a year, you can actually borrow from that already, and you can use it and cycle it and flip your property as it grows. From with that concept, since I know you are also focused business owners, right? Businesses. how do you use infinite banking with business owners? Now, I'm using 100,000 a year because they want to fund it more because, of course, real estate is expensive. And from your own point of view, how much is it really business owners want to or need or not want need to fund their business? I don't know how much. How much do you think is lower than, I guess, real estate investment? I think, or it depends on the
Depends on the
business.
size of the company.
Well, let's just say you're bubble tea. You had a bubble tea. How much did you had to shell out and put that business together?
With that shop, I had to put in. Well, I bought the shop at 30,000,
Okay.
and then I put in another 45 just to get it up to speed because it was an existing business, and I had to basically update it.
So how much would that be? Maybe about 80,000,
100,000.
80,000. So it's a little lower. So if you want to use your infinite banking, then you have a lower bracket. So let's say you want to fund it maybe 50, maybe 50,000 in a year, and then by next year maybe you're ready to borrow from it. If it's 80,000, then you want to put in 100,000 if you want to plan it next year, right? So it depends when you want to plan it. If you want to plan it 2 years from now, then you just have to adjust how much you want to fund your policy, right? And then from there, you can borrow up to 90% of it. Let's say you put in you already have a cash value of 100,000. You can borrow maybe 90,000 from that cash value, and then from there, as you grow your business, you want to put back and put back what you borrowed, so that it will bring back what your contribution is, and then it will accumulate more. But at the same time, if you borrow from 90%, it will still calculate it as 100,000 as if you didn't borrow from it.
Exactly.
So average again, if IUL 8%, it's a great thing if it goes to 12% for that year.
Well, one of the things that I was thinking about, because, we also do some disability products for business owners, such as overhead expense, where if the business owner gets something happens to the business owner, aside short of getting living benefits for our life insurance, they would need business overhead insurance from the disability portion of it. And I figured maybe we can take some of that money that we use for infinite banking and have the policy itself directly pay the premiums for that and other products that we may need for the business owner.
Yeah, you want to make sure that the policy that you're getting has that rider. You want to ask your agent, does it come with it, or do you have to pay for it, or it's packaged. Sometimes it's packaged. Sometimes you need to add it.
So it boils down to actually doing a full financial plan, whether you're an individual, whether you're a business owner, or whether you're an investor. The important thing is building that foundation of having that financial services, financial planning, that you need to build that foundation before they can actually do any of these other things.
Of course, again, the calculation is always by your age, client's age, and health. And, the whole assessment of what they can afford. And you have to go through that full assessment, financial assessment of the client in order for them to get approved.
Exactly.
Yeah, definitely. And hopefully, I know more and more young people, millennials, are getting into that real estate and business, and I'm encouraging everyone to to avail this and to get into this strategy while they're young. And most of them, they're like thinking about, all they know is like the investment of Bitcoin or crypto or just traditional investment. They have to understand that the life insurance also have this package of protection at the same time. It has an investment that can help them with their business or investments.
So basically, you're also saying that with the millennials, because of the internet, um, they actually still need financial services advisors like ourselves in order for them to really build their assets.
Yeah, so they really need some guide. I know these IOL are popping in and out in all these social media, but they really don't know the whole strategy. So they really need some guide how to do it, how to plan it, and it's just helping them walk them through and how to use that, especially if they're going to use it for their business. So yeah. Aside from that, of course, it's gonna be applied for their families, and it's gonna be applied for as a key person. Let's say maybe there- two or three people are use owns the business. You can use that policy for that, and you can have the beneficiary as the partners as their business partners
Yep.
in the
So it all
company.
starts out in building that financial foundation.
Yeah, yes, definitely.